Good afternoon, everybody. This is my first time to face you on this major call, even though I was here a couple of times. So it is a pleasure to come down and talk to you personally here on the phone. To begin with, let me state very categorically that our state of our company is very strong. Looking at the accomplishment of our company in last 6 months, the first half of this year, our growth is to the tune of 19%. Not only that, all our people, vision and commitment to delivering shareholders value remains unshakable. As you all know, there has been a change in the management structure. Mr. C.R. Rathi is no longer the MD of this company. Mr. C.R. Rathi's contribution to the company is immense, and he has been crucial to building our organization here. We are very grateful to him from ABT. Even though CL was the face of our company for several years now, there has been, underneath that, there was a deep professional management structure running this company. We have a very strong team with 9 senior managers, have over 150 cumulative years of history with our company. And that is immense. These are the people who build the company, and they will continue to take the company forward. I'm also a part of this structure. As you know, I am with the company from the beginning, since the inception, and I'm one of the founders of this company. Not only that, I also have 40 years of experience in enzymes and that will serve the company well going forward. As you all know, that I am the head of the US business, and that is the business which is one of the most profitable business in our group, and that speaks for itself. My brother and I started this company with a vision to make it leading enzyme and probiotic company globally. We have only just begun to scratch the surface of its full potential. And we are very excited about the future and glad to have you as a part of our journey. As you know, some of you know, who met me personally, I take my relationship with the investors very seriously. And in all honesty, there has been a bit of shake-up recently here. The management team is deep, and in all these shake-ups, one good part is that our management team is very deep in the process of realigning and re-strategizing globally. And in due time, I fully expect that we will be better, stronger company that continues to deliver the excellent growth. As I pointed out that the first 6 months of this year, we grew by 19%. I will be personally guiding this company through the next several years. This business is my passion, and in many ways, it's my another child. So I expect to stay here in an active role for the foreseeable future. Now, I would like to introduce Mr. Mukund Kabra. He's the Director of Operations, and he has been with the company for 23 years. He's also a whole-time director and has been a fundamental to our incredible success over the years. Mr. Mukund Kabra.
Thank you, Veer sir. Thank you and good afternoon to all of you. Let me take you through the financial highlights for this quarter. Overall, the financials are in line with the expectations of the company, and the company is on track to achieve our guidance. The consolidated sales are up by 5% year-on-year to 1032 million as against 986 million in last quarter, Q2 financial year 18. The EBITDA for Q2 financial year 19 stands at 441 million as against 414 million in Q2 financial year 18, up 7%. The EBITDA margin stands at 43% for this quarter as against 42% in Q2 financial year 18, and the net profit has risen by 16% to 259 million as against 224 million in Q2 financial year 18. As far as the first half is concerned, H1 financial year 19 is up by 19% to 2074 million compared to 1742 million in H1 financial year 18. The consolidated EBITDA is up by 30% to 929 million as against 712 million in H1 financial year 18. The EBITDA margin is about 45% in H1 financial year 19 as against 40% in H1 financial year 18. And the net profit rose to 571 million in the first half as against 387 million in the first half of last year. Now I will like Mr. Ravkar to guide you further.
Thank you very much, Mukund. Good afternoon, everyone. Let me give you some insight about the first half of this year. As Mukund has mentioned, that we have a top line growth of 19% as compared to the previous year. So in absolute number, we had a growth of about 332 million. Now this growth has come one because of we had foreign currency gain, which is about 4%, and remaining 15% is normal growth in our revenue. And in terms of our EBITDA margin, which has grown up from 712 million to 929 million and registered a growth of about 30%. Now this 30% comprises of 9% on account of FX gain and 21%, which is about 168 million, is normal growth in our EBITDA. Our profits are higher, about 184 million as compared to the earlier previous year first half of financial year 2018. Now this 184 million comprises of FX gain of about 55 million. This is about 14%, and our effective tax rate has gone down. Due to that, we have gained about 65 million. So that is 17% of our revenue. So normal growth in the profits is about 17%, which is about 64 million. So that's how this 184 million increase in our profits from 387 million to 570 million during the first half of the current year is. Now we would like to open the floor for any questions.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Dharmik Patel from Active Alpha Advisors. Please go ahead.
Hi, good evening. I have a couple of questions. First of all, how has Evox performed in this quarter? Are we at the break-even level at EBITDA level? Hello?
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 Yeah, you are asking about the question of Evox, whether we are at the...
Yes, this quarter, and are we at a break-even level at EBITDA margins?
No, we are not. I think last time also we have mentioned it will take couple of quarters to have really break even.
Okay, so should we expect by this end of fiscal year will be break even?
I mean that is what we are looking at, and I think Mr. VL Rathi will respond to you this.
Mr. Patel, the thing is, Evox is a R&D center, R&D research company. Okay, what we are trying to do at this time, and as we said this before also, that there are several different objectives with our Evox, and most of the things which is important for us is how the R&D pipeline goes with it, and it is going to be several years since we will have to keep on putting various different capital expenditures to R&D research work for us. Having said that, we are also developing our marketing strategies in Europe via Evox. So we are trying to establish that name and those brands again in the European market.
Okay. Second question is, in this quarter, human nutrition did not perform as well as expected. So are there any concerns regarding this segment?
Not at all. If you're asking about the U.S. human nutrition, U.S. business?
No, I'm asking for overall. So you can give me a overall highlight or what has been across the countries for this segment.
Yeah. We have a challenging macroeconomics right now, as I pointed out before also, and the things doesn't perform exactly per quarter to quarter,
Okay. So there is no issues in growing this business, right? It's just the macroeconomic factors.
Yeah, actually we see a very strong business movement overall going forward in the human.
All right. And how is our status on the palm oil business? Are we in line with? No, we are planning, right? We are planning to start a business in the palm oil generation in Europe. So, are we in line with the timeline that we had targeted of starting to generate revenue from FY20?
Yes, we are on that line so far.
All right, and one last question. The investments in current assets, the line item, it's increased significantly, from 0 to 72 crores in 6 months. So I just wanted to know where did we invest in?
Yeah, let me tell you, this investment in in our bonds, and this is in our US market.
Okay.
Yeah.
All right. Thank you so much.
Thank you.
A reminder to the participants, anyone who wishes to ask a question may please press star and 1 at this time. The next question is from the line of Amay More from Emkay Global. Please go ahead.
Yeah. So thanks a lot for the opportunity. Hello.
Yeah, please, Amar.
Yeah, sir. Hi, sir. So basically, three questions. Number one, like the earlier participants asked, in this new product launches, primarily from the palm oil side of a business, I mean, what is the kind of visibility we have, in terms of getting some early success or launching some new products by the next year?
Amar, we are right now doing some very interesting work in Malaysia and other places, and we see very promising results. But so visibility is good, but not necessarily very clear.
Okay. Okay. But then, so meaning, I mean, we actually commercializing something at this point of time is not clear to us.
See, in industrial business, it's a long-term processes where you have to establish the product repeatedly with the several different customers, and then go with the trials, pilot trials, long-term trials, and those things takes little time. Okay, that is when we are talking about 2020. But if you look at it right now, it seems very, very promising to us.
Okay. And secondly, sir, if I knock off your top client revenue from on a year-over-year basis, your non-top accounts basically.
We have to hope so, because everything, whatever they ask for, we supply. And then wait for their answers.
Okay. Got that.
Okay.
Does that answer your question, Samir?
Yeah.
Thank you. A reminder to the participants, anyone who wishes to ask a question may please press star and 1 at this time. The next question is from the line of Sagir Kharija from Chartered Capital. Please go ahead.
Hi, sir. Sir, I just wanted to ask a question about the slides. So if you could go on slide number 11.
Okay.
So on the slide, I can't see the number that you've mentioned on the result summary, which is the EBITDA of 93 crores in the first half of FY19. So the profit before operations, the EBITDA that you've shown is 81 crores. So I just wanted to know, how is that number different? So on slide number 9, we have mentioned an EBITDA of 93 crores.
So let me tell you, this is profit before other income, finance cost, and exceptional items.
Correct.
So there is a depreciation which need to be added.
Absolutely, sir. So if you look at the third line item on slide number 11, we have already, there is depreciation on that as well.
Right, it's right.
Okay. All right, no problem. Also, I wanted to ask a question to Mr. Rathi. Sir, could you please explain the shareholding pattern a bit in more detail? Because over the last 1 month, there have been a lot of pledging and non-pledging and interchange of shares between promoters. So just wanted to get your thoughts on the exact promoter structure.
The thing is, as you pretty know, that I personally brought roughly 4.9% or 4.8% share on the market from another promoter, which is to say Rathi. Okay?
Okay. Yes.
That's about it. Don't know anything else. That is the only thing I know which is changed as far as promoter is concerned.
Okay, all right.
To my best of my knowledge,
Okay, okay. Thank you, sir. Also, secondly, I wanted to know about the quarterly performance. So generally, the company doesn't have a very consistent quarterly performance because of orders shifting from one quarter to another. So the first half of the company's performance has been very encouraging. So wanted to know about the run rate for FY19 particularly. So I think the company had given a guidance of a profit of approximately 110 to 120 crores in FY19. So just wanted to know if we are sticking to that guidance.
So far we are sticking to that one.
We are already at 47%, 49%.
So I don't see, so
yeah,
far.
we have done correct. Okay. Thank you, sir. Thank you.
Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may please press star and 1 at this time. Participants, to ask a question, you may press star and 1. The next question is a follow-up from the line of Dharmik Patel from Active Alpha Advisors. Please go ahead.
Hi again. I have just one question. Are we looking for any other opportunities to grow? As in, recently in last 4 to 5 months before, there was a research done by some UK professor, and he had discovered plastic-eating enzymes. So, do we intend to, capture this market or try developing some enzyme for this?
Dharmik, it's an exciting area with the environmental areas what you are talking about. But at this time, that is not our focus,
Do we plan to move in this, a couple of years after, or are you planning to move into this direction?
Not at this time, Dharmik, but who knows? Once we achieve our targets, we will try to find new challenging areas. Enzymes can do wonders, as you know.
Yes, definitely. All right. That's it. Thank you.
Thank you very much.
Thank you. The next question is from the line of Sharan Pillai from Alicro Capital. Please go ahead.
Yeah, hi. I had one question. What do you reckon is the size of the addressable market for the palm oil business that you're planning on getting into in FY20?
The size of the business, that is the size of the business of palm oil you're talking about, right?
Yes, sir.
I think it's $500 million.
Okay.
$500 to $700 million.
It's an overall market of $500 million. Probably we will target $1 million.
Okay. Thank you so much. All the best.
Thank you. The next question is from the line of Rahul Marathe from Akash Investments. Please go ahead.
Hello.
Hi, Rahul.
Yeah. Sir, if you could just once again repeat the flow of PAT. You were giving some numbers on the tax benefits and the forex that we have, and otherwise on normalized basis it is 17%. So just those numbers.
So Rahul, the profit is higher.
Yes.
Number one, because of FX gain.
Yes.
Of about 55 million.
55 million. Okay.
Yeah, and then lower effective tax rates.
Yes.
That amount is about 65 million.
Okay.
And then normal profit growth is about 64 million. So this is the increase I'm talking about, 184 million. That is the increase in our profit after tax as compared to the first half of previous year.
Yes.
So first half it was 387 million. This year it is 571 million. So we have just dissected it and then, given it to you.
Yeah. Okay. Just wanted those figures. Thank you, sir.
Yeah. You're welcome.
Thank you very much. That was the last question in queue. I now hand the conference over to Mr. V.L. Rathi for closing comments.
Thank you, everybody. We really appreciate your support and, throughout this, our journey for last several years. And we really look forward to your similar kind of understanding and support in future. I really appreciate you coming down and asking and putting your valuable time with us. Thank you again.
Thank you very much. Ladies and gentlemen,